Hello, everyone. Welcome to the Deep Q Cast. It's great to have everyone joining us today. You have your host, Robert Ridzak, an advisor for Deep Q Digital, along with his compatriots with fantastic hairlines, Matthew Reed and Carlos Sendejas. Thank you so much for joining us, gentlemen. How are you doing today?
Very well, very well.
All right, man. We're living the dream.
Living the dream every day. I love it. I love it. Just for everyone that's joining the show, I know some folks are repeat listeners. For anyone that's new, the call is really about discussing the cryptocurrency markets more broadly. DeepQ Digital is a digital asset market maker within the crypto space. So you will see a little bit more tilts and also on with the news and commentary around digital assets from a trading perspective as well. I know, gentlemen, the macro markets have been kind of quiet today. Not too much going on. I mean, outside of you guys' hairlines, looking fantastic today.
Hair on point, man. Always.
Hair on point. It's
Always.
Important. It's important.
You gotta keep it tight. You know, we invest a great deal at the of the DeepQ Digital's budget on hair product and expenses. Yeah. Maybe when you guys go for your series C or A, you guys we can all do like off sites at barbershops and get our hair done. Oh, it'll be fantastic. Although you know what I really want to do at some point in time. Do you remember back in the it's like the 90s? There's that. No, it's even tangential. It's nothing to do with hair, but I'm just thinking about like embarrassing things you can do as a company with your like executive team.
Yeah.
Do you remember that video of like Steve Ballmer and Bill Gates dancing when they launched Windows 95?
That's so good.
It's an immortalized meme.
I can't wait for some like monumental event where we can all wear like oversized, ill-fitting golf shirts and like pleated khaki pants and just sit there and just kind of like, dance off beat. And it's gonna make me happy. I just can't wait for all the embarrassing things that we get to do as a team.
Amazing. There was a new one too. I think I saw Elon. There's one that Elon has too, isn't he? He's doing like a weird funky dance.
No, I mean, like, remember, like, Alibaba Jack Ma did some sort of, like, really fucking strange, like, Michael Jackson impersonation and I don't know what it is, but, like, tech entrepreneurs, once they get large enough, they have it in their heads that they should be entertainers at these sorts of, like, company roundtable events. And, under no circumstances will I ever dance. Under no circumstances will I ever do anything other than just, like, stand there and talk.
I'm just a pretty face and two left feet. Let's do this. Let's dance.
Exactly.
Let's dance. Looking forward to the day.
Yeah. I guess on other news, macro. What do we got this week, Matt? Like,
as you said, it's pretty quiet week in terms of like crypto pricing and everything. The main thing we've had in terms of numbers this week is GDP. So that beat expectations by 0.3%, I think. It's now at like 2.9% quarter on quarter. So that's good indication to fight off the fears of recession. So that's one data point for that. And then the personal consumer expenditure index was out yesterday as well. And so that one's actually more interesting because that's really what the Fed uses for as a better indication of CPI. They think it's a better representation of cost and prices of goods and services. So, and Powell has said several times explicitly that that's the kind of thing that he's looking at. And that came in slightly up. I think it's like 0.3% month on month, and year on year it's at 4.4, which is actually the lowest it's been in over a couple of years, I think now. So that's a pretty good indication as well. It's very similar to CPI. CPI is like fixed weights. This PC is like chain weighted or something. I forget how they do the calculation, but it's more variable as opposed to like it's been fixed up front for the entire period.
Let's cut to brass tacks then. Does this mean that the recession's canceled?
I think so, yeah. It's all good news.
You're recession boys.
What it does mean, though, is if the Fed do not do 25 basis points next month, then the market's going to completely freak out, lose its shit. So that's like now priced in. So 100%. So it'll be interesting to see if they hold to that, and then what the forwards mean as well. The forward dots.
If you were to make a bet, what would you think, Matt?
But 25 pip hike. Yeah.
No, I think it's like 25 bip hikes, and then the only thing really that we're even considering is sort of like what happens in the next couple runs. In which case, I think the market's pretty much just said, I do not give a fuck what you say, but we think you're slowing to cutting by the end of the year.
Yeah.
So recession canceled. Everyone go out and buy a second home.
Max out the credit card. I'm going to Vegas. I'm going to Vegas.
Listen, credit cards are already maxed out. I just got to find new lines of credit.
I gotta find someone else.
I gotta find some other sucker to loan me money so that I can go out and put it all on black.
I've got a bridge to sell you guys.
Oh,
got a bridge.
Talk to me about it. I've got a fresh new line of credit.
Nice. Oh, guys, I forgot to ask. What about beverages today? Since it is happy hour, what you got over there, Matt?
Very nerdy photon beer. Looked
Oh,
very cool.
wow.
So I got that one. It's called Equilibrium. I think it's New York. Yep, brewed in New York. Keeping it real and
Photon
local.
beer.
It's very on brand.
Yeah, it's good
Do
stuff.
they use like a Hydron Collider fermentation device for that beer?
Hope so. You can taste the particles. It's really good. Yeah.
Yeah, what about you? What about you, Carlos? What you got?
Well,
Patriot
I
water?
actually have. Well, that's for later. But today we actually have,
Okay.
in light of a slow news day, we've kind of been holding on to something that's a little fun, a little special occasion that we've got in the works. So I've got a little sort of like mini bottle of bubbly.
Man,
Because we have an announcement here.
I don't think you've had
Digital.
champagne since you graduated college. I haven't seen you drink
I
champagne in
didn't
a long
drink
time.
champagne in college. I went to BYU. What are you talking about? We actually have some pretty fantastic news in
That's
the
awesome.
sense that we would like to announce at DQ Digital that we raised our seed round of funding. So we are officially off to the races.
Congrats, you guys! That's fantastic.
No, it's
Fantastic! Congratulations!
It's a bit of a struggle given the kind of crypto environment. I think as a lot of people are aware, we launched in May of 2022. So since our inception, it has been down only in the crypto markets, and the enthusiasm of the crypto markets and the fundraising environment for crypto markets was not the most hospitable. So I think it's a credit to our team. I think it's a credit to our overall vision of what we are building and what we're trying to accomplish. And most importantly, I think it is a hallmark of the fact that we found a fantastic partner that we trust and that we wanted to have in our corner throughout the process of building our crypto company.
That's fantastic. They say and I think that's true. You even look at vintage years for venture capital. Some of the best years are in bear markets. The best companies get built in down markets. I think it's a testament to both of you guys, your ability to communicate messaging and to build value in the space to be able to raise capital in an environment like that. So that's fantastic, you guys. I'm super happy for you.
Yeah. So why don't we actually kind of get down to business? And, I think this is an interesting episode because I think we haven't really talked a whole lot about who we are, what we do, and kind of what our vision is. So I guess, spoiler alert, everybody watch out for a little bit of shameless promotion. And we also do want to talk a little bit about the process that we went through in terms of, raising money. It's a bit of an opaque process. It's something that for us, we had to kind of do a lot of trial and error and kind of figuring out the right way to go about it. So alongside, I guess, sort of sharing our vision for crypto markets and what we're building, we also wanted to have a conversation about the process of, raising money and, raising funds in this type of environment. So with that being said, I guess, well, first being, I guess, who did we raise from? Where did we find it? So our lead investor, excuse me, is a fund called the SALT Fund. And I think for a lot of people that are aware of sort of like capital markets, the SALT conference is one of the premier conferences for buy sides, kind of a who's who every year of buy side investors go and speak and gather. And they recently put together a fund that they use to invest in cryptocurrency ventures. And their mission is really to support the institutionalization of the crypto industry. And for us, really, that's kind of the genesis of what we do. Both Matt and I were, market makers for fixed income, currency, and commodity businesses in TradFi. I was at both Deutsche Bank and Bank of America, places that do roughly, anywhere from 6 to 10% of all FX spot volume in the world. And we traded with some of the biggest, hedge funds and asset managers in the world. And one of the biggest gaps that we saw in the market was sort of, I think in the crypto market, people were trading in such a way that we didn't think was fully prepared for what we'd call like institutional capital. And, having become very aware of what those types of clients expect and what they want and what they look for in their liquidity providers. And we can go into detail exactly what I'm talking about, because I'm using a lot of jargon in terms of like institutional capital, liquidity providers, so on and so forth. But I think the name of the game is that the place where you trade and the metrics that you look at when you are trading is significantly different for large scale investors than it is for retail. And so the infrastructure and the piping to do that is actually pretty different as well.
Quite different.
And so we're looking to be one of sort of the key liquidity providers in the world where institutional capital really kind of flows into crypto. So we come from it with a slightly different lens in the fact that, both Matt and I have been following crypto for a very long time, and I would consider myself to be a crypto native. But at the same time, we do come from a TradFi world, and we bring the experience of, having traded with some of the big boys on the street for the last, decade. And so that's what we think is sort of a key advantage that helps us to bring some expertise to the field.
Yeah, so that's a good example. Like, we should do an example then. So, like, a big player could be Fidelity, for instance. So, someone that manages a pension fund and now maybe wants to add crypto exposures to that fund or something. How would they go about doing that through us, say, Carlos? Or what would be, or not even us, just what would they be looking for as an institutional player? What are the types of things? Because that's really what we're trying to solve for.
I think that the biggest thing that people, I guess, should be aware of when you think of like institutional capital, and maybe I'll take a step back and I'll actually define institutional capital in a way that makes sense to me, because I think people in crypto tend to use that word a little bit flippantly, meaning anybody who calls themselves a crypto fund or anyone who's trading in over like $1,000 increments is technically like institutional capital. And there's varying degrees of institutional capital, but when I think of institutional capital, I really think about like large pension funds. So, for example, if you're California like state pension fund or Texas teacher state pension fund or Ontario pension fund, like you have these public pension funds that really have billions and billions and billions of dollars of assets of public money. And if you think about it from that perspective, when they deal in any asset, they are a very large portion of the market. And so for them, the most important thing when they get into a position is that they do so discreetly. So if you think of, let's say you're, Fidelity, Matt, and you've got mutual funds and retirement funds from, millions of people, and you make some allocation in that mutual fund to invest, 0.5% of your fund into Bitcoin. This is just a hypothetical. Well, 0.5% could be, $500 million. So it's very, very easy for them. Well, it's not easy in the current crypto market. You're not just going to go to Coinbase and be like, yeah, I'd like to put a buy order for $500 million, right? People would find out that there is a buyer for $1 billion, and it's very easy to move the market against them. Meaning they'd be like, oh, someone's buying, crypto. So what I'm going to do is I'm going to buy a ton of it, right? In expectation that I know that they have to buy it from me as the price goes up. So when Fidelity buys something, they want to make sure they track what's called their order slippage. And so they have some arrival rate, right? And the arrival rate is really just, when the portfolio manager at Fidelity says, hey, we'd like to allocate 0.5% of our fund to Bitcoin, they're going to look at their Bloomberg terminal or whatever they use for prices, and they're going to say, the price that I'm seeing right now on the screen is, 21,000. And they're going to call up another team. They have a special team of people that are called execution traders, and their job is really just to discreetly work into very large positions. And they get graded based on the price, the average price that they get into the trade versus the price that the portfolio manager observed when they told the execution team to trade. And as you can imagine, they have a trade-off, which is, all right, I would like to get as much as I can done now because that minimizes slippage. But if I do it too much now, then it'll tip off the market. It will move the market. There probably won't be enough liquidity for me to actually go out and find, $500 million worth of Bitcoin right now to buy. So that would very much drive up the price. So they have a series of sort of sophisticated and I guess unsophisticated ways for them to go out and go to the market and find access to liquidity. But once again, the name of the game is really, how can I find that Bitcoin? How can I find, access to that liquidity in a discreet way that doesn't, sound the alarm to the market immediately that I'm doing something?
I know you guys have all worked a lot in traditional finance. How have you seen those relationships evolve? Is it more of like a sticky relationship where you'll have like a direct dial-in for somebody? Is it done more through electronic format? Maybe you will bid your orders to a discrete group. How does it usually work?
Yeah, so I think with the evolution of electronic markets, what you're finding now is everyone is very data driven. Mm-hmm. And I would say the reason behind this is because fees in the market have gone down dramatically. And Rob, you're actually probably the most qualified person because you deal with this on a day-to-day basis. But, when you think about profit margins for an asset manager, typically what does that fee structure look like now versus maybe what it looked like, 10, 15, 20 years ago?
Yeah, fees have come down and they've continued to come down quite a bit. I think there could be a number. This all happened. A lot of that trend happens post GFC, a very low rate environment with a lot of Fed money.
And when you say GFC,
global financial crisis. That's right. Sorry, my lingo. So what we've seen is you've seen a lot of volatility get compressed. And so become more challenging to beat the benchmarks if you're in a long-only portfolio. And so because of that, active management or active outperformance has shrunk. Fees have also gotten compressed a lot. So to your point, I think what you're trying to get at is people have become a lot more price sensitive regarding transactions because it really will erode a lot of your relative value. Yeah.
It used to be that you could go to a hedge fund and you could pay them, you pay them like 2%. 2 and 20 was the model, right? So
Yeah.
2% of assets under management was the fee, and then 20% of profits. Asset managers were maybe slightly below that, but asset managers now have to compete with just a regular, passive index, right? Some ETF that someone puts out where the fee is 20 bips a year. So when you're dealing with very much tighter margins, when those guys try to understand how they can be better, how they can, one, have better performance, and two, how they can, be more profitable. The first thing that they do is they invest a ton of analytics about their actual trading. And so they scrutinize things like spreads, fees, etc. And, when you're a market maker and you're dealing with someone like BlackRock or Fidelity or whomever else, one of these very large asset managers, you're going to get beaten down by spreads pretty precipitously. And they don't look at even just spreads. They look at what they call their total cost of execution. So they look at things like their slippage when they deal with you. So if they deal with you and then you go out and you trade in the market, really noisily to hedge your positions, and you give up their position, then they get pretty mad, and they can track exactly what happens when they look at you. And they have teams, multi-million-dollar execution teams that put together these pretty extensive data sets, and they rank and grade every provider they have. And they look for whoever gets them not only just the best fees and spreads, but also who gives them the best total cost of execution.
I think that's the key. There's a lot of transaction cost analysis tools now as well that you can even just buy. So the data is key, and that's driving a lot of these initiatives where that people want to get the cost as low as possible. But the execution cost matters to the end of day P&L that they make.
Yeah. And so I think that when you think about, what those guys expect, right, is they expect a very technically sound team on the other end of their execution. And they expect people that know how to be discreet when trading. Because one of the biggest components of your, total cost of execution is what we'd call market impact. And market impact, I will define as effectively the cost of dealing in the market when people know your position. So if you think of any time you trade that actually has information that you give to the market, and when you give that information away, you give away your position. So think of it like you're playing a game of poker. If you're sitting at the poker table with somebody, and I guess maybe like worst case and just shittiest thing to do is like someone turns around their cards and is like, "Hey, are these good?" Okay, cool. Now I know exactly all the information on the table right now. I can use that to my advantage. Doesn't matter what cards they have. Once you know what cards they have explicitly, great. But there are also other things that you can do that are maybe a little less explicit, which would be, let's say you get your cards and you give a little smirk and you're like, ah. And then suddenly when your time to bet comes around, you're like all in. I guess you could be the world's best bluffer, but generally speaking, if you're a noob and you have a little giggle and a little laugh when you see your cards, and then you're like all in, right? Like people would be like, okay, I think I'm gonna fold this round.
Carlos has played poker with me too many times. I can tell. You already know that.
I will say it's cute though.
Thanks. Appreciate it.
I like your exuberance when you play poker.
Appreciate it. Thank you.
So either way, like it's a game where people are trying to not only understand the probability of their trade winning, but also try to understand the probability of their trade winning given what other people are doing in the market. So if you give away too much information, then you lose. And so all of these people have sophisticated analysis tool sets to help them understand how much of the information or the quote market impact that they observe happening when they deal with their various providers. And this is a rubric that they use when they're trying to work their way into positions. So I can tell you from like firsthand, having been on the other end of the table when people like, BlackRock and Fidelity and, name a large hedge fund or pension fund call you, right? They expect a certain level of execution, and maybe they'll abide by a one-off here and there that's just like random, but they're going to look over the long run with your firm and they say, listen, when I deal with you, X number of things happen, right? And I can explicitly tell you with data what the outcome is. And as a result, I'm either going to move you up my stack or I'm going to move you down the stack. And so I guess to make a long story short, DQ Digital really is about providing trading tools, both technology as well as just general liquidity that's geared around this concept of, how do I efficiently and intelligently manage my own risk? How do I inject some intelligence in terms of the information that I am getting from the market? And then how do I make sure that when I have that edge, that I'm not leaking it out to the market with, really poor execution, or as Rob loves to do, giggling like a schoolgirl at the poker table.
That's why I stopped drinking the Manhattans when we went to play poker.
Yeah.
We should write those 3 points on the website, by the way. It's a good summary.
So that's really kind of like the foundation of what we're trying to do. It's a skill set that we've honed over the past decade working in TradFi, and I think one of the key themes that is interesting for me anyway is you'll find that like crypto likes to speed play through all the mistakes of traditional finance, when they could have just listened to some of the people that have been there and seen the evolution of markets. And so I can remember being a grad on the desk and seeing the evolution of the foreign exchange market as it started to get electronified. Because believe it or not, even in 2011, when I was first an intern at Deutsche Bank, a good portion of the business was done over the phone. You'd call people, and you'd be like, "Hey, blah blah blah, bid offer here, blah blah. You're done." And then lots of yelling, lots of people marking things manually. Mm-hmm. And over time, it took a decade, but by the time I was done at Deutsche Bank, it was like 97% of all foreign exchange trades were done electronically. And I think, similarly to, we'll look at like mobile telephony in Africa and other places like that, but it's like in developed countries, it took, 20 years to get to the point where like cell phones were part of the original, conversation to everyone had a cell phone, and like landlines were done. Like that transition happened in a couple of years in developed countries. And so I think like, Matt and I have seen the evolution of electronic markets in TradFi, and that took a decade plus. And in crypto, I think it's going to happen, instantaneously, because they just didn't have the legacy infrastructure that a lot of the TradFi markets had.
Interesting. And how are you? So I guess maybe getting a little bit of background from fundraising, like what was that looking like? I think it probably could be interesting for a lot of folks that are listening to the podcast that might also be interested in entering the crypto markets and just fundraising. Maybe you have some intelligence, some wisdom you could share.
Yeah, do you want to cover the types of people you can get funds from, or like the types of funds you can raise, so like safes, notes, that kind of thing? Or any preference, or all of it?
Yeah, I mean, yeah.
Actually, Matt, why don't you? This is kind of an interesting story. Why don't you give like a quick rundown of maybe the story of us getting funding, and then we can break into details of sort of how we approached it and went into go into that.
So we started trying to raise, around, when was it? What was the month? I forget now.
Well, we had started to have conversations with people, because both you and I were under non-compete agreements with our former employers.
Yeah.
So most of the initial conversations were just sort of like friendly coffee chats with people to say like, hey, hypothetically, if we were to do this thing, what might that look like?
Yeah. Effectively, just we can do this. Give us some money, please. But no, I mean, we had some stuff to go with as well, so it wasn't like we were going in with nothing. We have lots of back tests and things like that. But yeah, initially it was reaching out to. So we made a choice that we weren't going to approach VCs initially because we wanted to find a partner that kind of had a trading background. And we kind of get what we're trying to do. And that got pretty far towards the start of the year. That was one of the first people we reached out to. I'm not going to go into who it was, but they were pretty much all in. We're going to do our full seed, back us. We were all looking pretty much done. I think
we're talking like had called references, done a lot of due diligence, all the stuff. So we actually we quit our jobs and we thought this is going to be fucking easy. Like we roll out and people give us money and life is fantastic.
Got the wedding dress on wedding day.
This is like totally before the crypto winter kicked in and like Ukraine and the markets started having trouble towards the middle of the year. But so that I even got a call from a headhunter congratulating me on the fact that we'd secured funding. And like, if you need any hires, let me know. And then
news travels fast.
So then,
exactly. This was a headhunter that had a relationship with the people that were going to back us, and they had let it slip. Like, oh yeah, I know those guys too. So he called us up, not knowing that we didn't know. So let's just say when we found out that the deal did not go through, we were a little bit surprised.
Yeah. So then that was like into May. We were like, oh, okay. So we have to start looking at. And I mean, Rob, like, I think you gave some color on that. Do you want to as an advisor, You've been pretty good at giving us advice on this process throughout it.
I'm just on this general on the trying to go out and raise a series or a seed round.
How to do it because it's there's no like document to say, hey, this is how you go raise. It's I mean, you both did a lot of pretty much all the networking, right?
I think that the key here is that I guess there's a couple of things that come to mind. The first is that when you're looking to raise funds, you really need to be mindful of who fits your niche and who understands what you're trying to do. So one of the reasons why we decided not to go to just like standard VCs is because what we do is actually pretty technical. And so like to the uninitiated, they're like, oh yeah, like DQ Digital, you're just like a high frequency hedge fund. And I'm like, no, not a hedge fund, technically not high frequency. We're an electronic trading firm and we provide a very specific kind of liquidity, really suitable for like, investors. And to be honest, traditional high frequency trading is not suitable for institutional investors. It's basically it's like paying someone to tell everyone at the poker table what your cards are, because that's effectively what they do. And they don't care about market impact because they're in and out of the position almost instantaneously. So by the time that you've complained about your market impact, they've moved on to the next, 10 trades from now. So we're not that, but like, if I'm going to sit around and have a nuanced conversation with somebody, I want them to somewhat understand. So, if you go to a generalist, VC firm that focuses on, software as a service, they're like, cool, let's talk about, software as a service metrics and, what's your total addressable market and all this sort of stuff. And you're like, well, that sort of applies, but it's not what we do. I think this is true for any investment. You really want to not waste your time talking to people that don't really have, the expertise to be smart money in the field that you're trying to raise for. So for us, we wanted to talk to people that had some markets background, because people that have a markets background, particularly trading in, large sizes for institutions, know exactly what our value proposition is. And so we don't need to first educate them. All right, one, what is a Bitcoin? Two, what is the current state of the market and why does it suck for institutions? And then three, why are you good at doing that, right? Like we could find people that already got 1 and 2, and then we could just jump straight to why are we the team to do that thing? And that to me was a much easier sell than coming in from first principles and saying, okay, first let's talk about what a Bitcoin is. Then let's talk about the current microstructure and by the time you get to that point, eyes are glazed over. No one really knows. We're like, all right, so tell me again, how are you going to compete with Citadel? And I'm like, well, I'm not going to compete with Citadel because they are the exact fucking opposite of what we are trying to do. So there's a little bit of, picking and choosing your spots. And I think that is maybe one of the best pieces of advice I can give to people when you are starting out, is making sure that you understand who your target market is. And not to say don't talk to, anybody, because sometimes you just need to take whatever call falls into your lap. But I think if you're prioritizing where you can network and where you can meet with people, really try to understand people whose values align with yours.
Yeah, and it takes about 10 times as long to educate somebody as it is to talk about a business that people already understand, right? It kind of can speed up that conversation pretty fast.
For sure. I think the other element about this was I don't think people really understand the value of having a network and the value of having like a track record of success. Like most people assume that like startups are just like, oh, I cold call and I grind and I hustle and I meet a VC and suddenly like they fall in love with me and they give me $1 million and then everyone's happy and everyone's billionaires. Because I think at the end of the day, a lot of VCs or a lot of people that invest in seed rounds want to see that you've got domain expertise or some demonstrated value that you can bring to the table. You're just not just some like random person, and that might be you're young and hungry and you went to Stanford or MIT, and so that's certainly a thing that people look for. But it could also be that you've got a decade of experience in the domain of the thing that you're doing. That's also pretty powerful as well. And so I think for us, would it have been easy for us to raise money for what we're doing had we not had that decade of prior experience, and had we not had a network of colleagues, former clients, former bosses, et cetera, that were willing to go to bat for us, some of whom invested money as not the lead but also investors in our fund, some of whom made introductions to us to other people. Those are the types of things that it always pays to start with people that know you, people that value your work product and who can go to bat to you. If you have those, it's significantly easier.
I'm sure a lot of your prior connections, just given the work that you did at some of the other banks, was really helpful as you guys were branching out too. Just that connectivity is super important.
Yeah. And even then, I think the other key maybe is that like it's not a situation where you just call up an old client and I'm like, cool, let me give you $1 million because I've got $1 million lying around. It's more along the lines that people are willing to vouch for you and make connections. So it's like the likelihood that someone in your direct circle is the person that invests in you is maybe low. Like we got fortunate that we had, someone in our direct circle that was like an early, advocate for us and really wanted to go to bat for us. But it could also just be that someone that, is like, oh, cool, I really think that's awesome. Let me introduce you to somebody else. And then that person also introduces you to somebody else. And so that level of connectivity, you just need to follow up with it from front to back because, if I look back at it, we like how we got in touch with people. It was like a former colleague connected us to, one of his current colleagues who invested in it, connected us to somebody else who was like, well, maybe not for me, but you should speak to this person because they have a crypto fund, or you should speak to this person because they make these types of investments. So always following up and always being willing to take that next call. But it starts with having a core group of people that know you, like you, and are willing to make that connection for you.
Yeah, we definitely never, I don't think we ever once refused a conversation with anyone, right?
Yeah. What about any other, any lessons learned, like challenges maybe, or things that you did that you may have, or you think like common pitfalls that might, the other entrepreneurs might be facing? they'd be best to avoid?
I'd say the biggest one for me was kind of what we touched on, the first one, thinking we were done. Like nothing's done until it's there's a contract there. So I think just making sure you have as many pipelines running at the same time gives you plenty of options as well. And so we kind of second time
nothing's done until the ink's signed, the ink's dry.
Exactly. I mean, it sounds obvious, right? But then it's like actually, you should just keep as many options.
Weirdly enough, I my background is somewhat interesting in the sense that I'm a technical person. My first job out of college was in like a technical role. Went to B school and then went to and studied finance and then worked in like programmatic trading. But like when I just graduated from college, I had a mentor who told me you should take a swing at like a sales job while you're young, because that's like the best training for life. Because every job that you will ever have from the time that you graduate on eventually converges on being a sales job of some sort, whether you're selling investors or employees or managers, like you've got to do sales. So I went to go work for like this software company, like, a year and a half out of college until I went to B school. And the thing that I learned more than anything is that most people assume that sales is a charisma type of role. It's kind of a charisma role, but more than anything, it's just detail orientation and keeping track of everything. So understanding your pipeline, meaning like these are the different phases of a sale or a fundraising process, meaning, first one is generating leads. Second one is getting that person interested. After you get that person interested, maybe you go through some due diligence process, and then you get them to decide, and then you have to go through the legal process, and then you actually get the check to clear. But there's like multiple stages, and understanding that those stages need to get done, that it's not done until the check clears. And if you can be very detail oriented about that, knowing that there's going to be attrition, right? Like not every person that you talk to is going to go from a lead to a prospect. And so just keeping that, knowing that it's a full numbers game, and then keeping a fully detail oriented, whether it's through some sort of CRM or Excel spreadsheet, just whatever you need to do to keep track of all the different things that you have, and understanding that there's some funnel that you have to go through to make sure that's done. I don't know, Rob, you've actually got a lot of experience with that. So.
I find it's so funny you say that, because I find that the longer I'm in this industry, the more I see that there is a process that is consistent regardless of whatever it is you're investing in. Whether you're investing in people, if you're trying to sell something on the asset management side, it doesn't really. There is this funnel. Like you look on if you have something who's investing in private equity, they're also going to have a sourcing funnel. They're going to have companies and relationships and people that they try to reach out to. Some deals are not going to be in their strike zone, so they're not going to invest, and just kind of goes through this funnel, this due diligence process till they get to a few trades that they actually do hit on. And it's the same thing if you are a young entrepreneur, or a seasoned entrepreneur like Carlos and Matt are, that are trying to identify prospects. You have to have this like very large funnel, have a lot of conversations, and to like what Carlos said was a lot of ancillary acquaintances. I think acquaintances are actually where most of the business gets done. You have your core circle that kind of provides a lot of those introductions out into that outer ring. And that's usually where a lot of that business gets done. But it's also like you have, as you go through that process, you start to have 100 lines in the water. There's a lot of different people, and being able to stay on top of those and be able to make sure that you don't forget about them. It takes process.
Yeah. And to that note, I would tell anybody that's going out to raise funds, it becomes a full-time job, and you need to treat it like it's a full-time job, because you need to, make sure that you are managing all those lines in the water and keeping track of that funnel from beginning to end, because otherwise you lose track and you won't be focused. And that's true of anything in business, and once you start once you stop fundraising, the next bit is going to be the same funnel, whether you're sourcing new business or finding new vendors or whatever. It's the same process. So a lot of it's just understanding what that is. And most importantly, I think like we used to, when I was in sales, I remember like my boss would always laugh at me because the first couple of times I get off the phone with a prospect, I'm like, oh, awesome. This sale's done. They're like, why? Well, because the guy loved the product and he told me that they wanted to buy it. He's like, all right, cool, let's go through this. Is that the guy that can actually make the decision? No? Okay, then you're not fucking done. Once he makes the decision, like, what's their contract process like? Well, I don't know. Well, then you're certainly not done. Because you need to understand every little thing about how this gets done, because someone talking to you and loving you and being like, yeah, we're so in is so it's like a mile away from finishing the sale. So you really, really, really need to understand what the process is before you can go, because there's a procedural element of making sure that you understand the process from front to back, from the time that someone says yes until the time that the deal is actually done.
People talk about a funnel. I actually think that it actually looks like an upside down sombrero, like a super freaking wide rim, and then it goes like this and then down,
Yeah. Yeah. Well, I guess on that note, you should really have a thick skin as an entrepreneur that's going out. I dated in Manhattan for a number of years before I met my wife, and I can tell you that, like, I always use this analogy. Like, I dated a lot of women before I met my wife. And you kind of need to understand that there's going to be, for every person that says yes, there's probably about 100 people. They're going to be like, not for me. You're going to get ghosted. You're going to get told no. And not only you're going to get told no, you're going to get told no in very maddening ways too. And your job is just to be like, thank you. I really appreciate your time. Let's move on. Because some things that just like, for instance, I loved when people were like, listen, guys, we really just don't want to invest right now because we'd like for you to put your own money in and de-risk it a little bit before we invest money. And I'm like, great, if I put my own money in and get this to the point where you think it's worth investing, I won't need your fucking money then. Or people would be like, listen, we heard your thesis and you're wrong because of this reason. And they're like, you clearly have no idea what you're talking about. And so you're just like, all right, cool. Like that's your opinion. That's fantastic. Yeah. I'm not going to sit here and, get angry. I'm not going to get mad that you don't see things the same way that I do. I'm not going to let it affect my worldview at all. I'm pretty certain that the way that I view things is, directionally accurate. And then you just got to keep moving, because once again, for every yes, you're going to get about 100 to 1,000 no's.
What are you guys thinking about now that you have this seed round closed? What are your plans like for the future? What are you guys thinking about doing? I mean, at a high level,
world domination.
World domination. Short, sweet, easy. 2 words.
World. I remember that show, The Animaniacs, from back in the day with Pinky and the Brain. What are we going to do today? Find ways to take over the world. No. So our funding plan is really quite simple, which is our core thesis is around great risk management, fantastic alpha, and really quality execution. And we feel like we've built out some pretty great tools to prove that concept. Our primary goal is to prove that by being sort of a leading market maker on public venues for U.S. persons. So, we're not doing offshore stuff at the moment, primarily just trading on U.S. venues and proving that concept. And very shortly thereafter, we will expand and either develop an offshore presence or also look to get into more OTC trading to deliver really sort of like hands-on service for institutional clients. So Right now, we're actively building. We've got, like I said, pretty fantastic technology. We've got Matt's particular specialty is alpha generation. He's one of the best in the business. Those years at CERN were not wasted. And
wasted on quantum mechanics. God, what a waste.
Yeah, what a fucking waste. You were determining like the secrets of the universe, and now you're just using alpha models to determine the direction of Bitcoin.
It's the rat
from Higgs boson to Bitcoin.
Yeah, no, but like I said, we do have fantastic alpha. We kind of have a motto that we like to do the hard bits first, and I think if you look at electronic trading, hands down, the hardest thing to do is to find scalable and replicable alpha. And I think that's a problem that we've solved and that we will continue to solve. And then from there, the applications of that are actually quite wide and varied. But we definitely want to be focused on this element of how can we deliver value to institutions that are looking to trade crypto.
Love it, guys.
And hiring, I guess that's the other thing we should.
I was going to ask about people. I was going to see about that. Yeah.
If you're already a quant or interested, please do hit us up on either on our social, LinkedIn, or directly. We're pretty open to discussion.
Yeah. You can find more information on deepqdigital.com. Also, LinkedIn, DeepQ Digital, and Twitter, right? Yeah, and I think
Instagram. We've got an Instagram too, where you can hear clips of this show.
We hip.
We're pretty cool.
I've been trying to get Carlos to go onto TikTok. He hasn't jumped on that bandwagon yet.
I'm learning dances, and
we'll get there.
As previously mentioned,
this conversation has gone full circle. This is why he's actually been.
Listen, when I get my dance game on point, I'm going to open up a TikTok account for DeepQ Digital. It will be very confusing because how dancing correlates to digital asset alpha, I do not know, but the kids love it, so it'll work.
I love it. Unless they ban TikTok, I heard that in the news, by the way.
Oh yeah, that's true. Well, you got to be careful of intellectual property leakage. So maybe we'll scale off of the TikTok.
Instagram and Facebook it is.
Yeah, Instagram. Exactly. Where they spy on you, but like in a friendly way for America.
That's awesome, guys. Is there any other topic? I feel like we went through a bit today.
No, I mean that's a pretty good pretty good summary. In a light news week.
Yeah.
We're delivering value.
Awesome. Looking forward to seeing you guys grow.
Cheers, amigo.
Take care.
Bye. All right, peace.
Bye.